We've got with us Nrupesh Shah, the ED at Symphony Limited, joining us on the show right now. Nrupesh, hi, good morning. Good to have you on the show. After 2 washout years, including COVID-19 peaking out, and now with the summer onset coming in, already predictions being made of it being the hottest summer that we've had in a while. Maharashtra already in the midst of a heat wave. I believe you must be having heightened expectation from the summer season this time.
Yeah, thanks for having me. Of course, we are cautiously quite optimistic, and there seems to be all initial very positive indication. So we are really looking forward after back-to-back to bad summer, not on account of season, but on account of COVID. We as well as our trade partners are quite buoyant on this summer season.
Could you quantify that a little bit for us in terms of telling us what the order booking is looking like, what kind of volume growth roughly you're expecting? Because this is going to be a prolonged few months of which we are likely to see the summer season play out.
It's very difficult to quantify. One, because there is already huge inventory lying with the trade, not only of the last year, but with some of the trade partners even year before. So first and foremost, that inventory has already started moving by a way of secondary sales. And then actual consumer sales is happening. However, e-commerce sales, large format stores where there is no backlog of any inventory, it's already doing well. So in fact, for current quarter, as well as for June quarter, we are certainly cautiously optimistic.
Okay, now let's talk about your margins as well, because they have been under pressure. The raw material price inflation as well has been impacting your overall margin picture. So what is the pending raw material price inflation that needs to be passed on, and how do you see your margins faring?
First and foremost, despite massive cost increase, massive increase in logistic cost, not only for domestic logistic, but also international logistic. Very happy to share that on consolidated basis, our gross profit margin percentage will be intact. It may be in line with last year or even better than last year on account of variety of initiatives already undertaken by us. That's part one. As far as standalone margin is concerned, it is going to be lower. One, because intentionally and strategically, so far we haven't taken the price increase, and at a right time, if required, we may opt for price increase in the summer season. Secondly, on standalone basis, now our exports to subsidiaries also account for a big chunk, and their profitability is shared by Symphony standalone India as well as our subsidiaries. So more relevant picture may be consolidated profitability, which is likely to be in line with last year or even better than that. And that's what we foresee even for ensuing quarters.
I also wanted to understand whether the enthusiasm of the upcoming summer season has translated into dealer sentiment as well being strong, because we were understanding that currently at least there was weak demand which you were witnessing at a dealer level.
No, what I say, dealers are sitting on a large inventory. So first and foremost, they will like to clear it. But dealers by and large are having very positive sentiments. They are also quite confident, and they are also looking forward good summer sales.
And unorganized players, which account for close to 70% of the industry, are facing challenges. What kind of a market share do you think Symphony will be able to gain on the back of this?
So in organized markets, Symphony commands almost 50% market share value-wise. And despite intense competition, we are very confident to maintain, or maybe in some of the segments we can increase. As far as shift from unorganized to organized is concerned, just like many other industries, that is a normal progression. And on account of variety of reasons that's happening. Say just 7-8 years before, unorganized was contributing almost 90%. Now it's contributing 70%. And hence in the years to come, we expect that pace to really accelerate.
Okay, fair enough. And is there any sense as to what the outlook is on the increased competition that the company is facing? Because we've seen strong potential for market expansion that could potentially impact the company's profitability. Are you worried about this?
As far as profitability is concerned, as I said earlier, on a consolidated basis, our profitability margin, despite massive cost increase, logistic cost increase, will be in line with last year or better than last year. So that is really the proof about variety of initiatives which we have undertaken. That is on account of launch of new models, innovation, substantial value engineering, which we have done, operating efficiency, which we have improved, and also in some of the models, selective price increase, which we have taken. And we are very confident to maintain at that level.
All right. Thanks very much for giving us a sense as to what the financials could look at despite some of these concerns, the kind of inventory that you're sitting on, and what the outlook is when it comes to the volume growth.